The S&P 500 took a breather on Tuesday and closed out a choppy trading session in the red. This ended the 4-day climb toward another all-time high. It has been a pretty steep climb, so don't fret too much. The Dow ended the day up while the Nasdaq faltered, dragged down by continued selling in tech stocks. Global coronavirus cases hit a daily record on Monday, with more than 1.44 million worldwide infections reported. Infections from Omicron are found to spread 70 times faster than previous strains. However, illness caused by the strain is less likely to be severe or lead to hospitalizations. As for the rest of the trading week and into the new year, it's expected to be mostly quiet with trading volumes low and with little economic news. Going into 2022, inflation, Omicron, and the Fed are on everyone's mind. So, what do the charts indicate? Let's take a look. Today we're going to look at one chart, which is the Fidelity Nasdaq Composite Index ETF, and the symbol is ONEQ, and this serves as a pretty good proxy for the Nasdaq. And we're just switching up a little bit simply because the charts look relatively similar. Now, this is the 1-year daily chart, and beginning back here in March, on the way through, you can see that we have a pretty good bottom channel line moving through like that, and then of course we need an upper trend line moving through like that. Not a straight line, but you get the idea. And as you can see, we bounced off here in May, here in October, and then here in December. So just judging by those three bottoms, my sense is that we're going to make our way up to that top channel line. It is going to take a few more weeks from now, but I think that the move into new year and beyond is going to be on the way up, trundling up toward that upper trend line. Let's look at the oscillators moving on down here. Volume looks fine. Can't really say too much about that, but definitely here in the MAC. Once again, the bottom and basing and the move of the fast line up through that slow line near the zero line, so there's a lot of strength. Same thing here back in October as well as in May and here in March. They all had bottom and basing of various charts, but they each had a pretty good springboard up and through, and I think that's what we're going to get right now and into the new year. Moving into the histogram, you see pretty much the same thing. Came all the way down here on each of these moves, not too dissimilar than the subject. And this had a hesitation once we moved up here. We came back down here, had a little bit of another bottoming and basing before it headed on up. But these others had moves on the way up, just like that. I think we had a bit of a hesitation here, but we're above the zero line on the histogram, and I think we can stay above that for some time. And as long as we do, the price is going to march higher. Into the price rate of change, pretty much the same thing here in a little bit different format, but you can still see the same sort of formations, bottom basing heading on up above that zero or midline, and as long as we stay above that, we're going to continue up. Here into the relative strength index, the RSI, we're at a moderate 59.86 above that midline or 50 line, and once again bottom and basing heading on up, and I think we continue to stay above that 50 or midline for a month or two. Into the stochastics, you can see once again same thing, and then the Williams always heads up a little bit earlier simply because of the math, but it's up here in the overbought territory, but I think it stays up there for a month or so. Moving on back up to the price chart and one last look, and you can see that definitely things are moving on up in a relatively decent fashion. The stock price just has a bounce, a rebound, and then it marches on up toward that upper trend line, and I think that's what it's going to be for the next month or so. But we'll check in. Until then, this is ChewDog Charts. Thank you.